Hey guys, welcome back to T2SMC Trader to top-down analysis. How are you all? I hope that everyone is cool. If you can hear me, just let me know. In the meantime, if there is anyone from Portugal, just let me know. Just let me know, okay? I need some information actually. So if anyone from Portugal, just let me know. At the meantime, please let me know if the sound is clear or not. Hear you loud and clear. That's cool. Thank you, Slate. Thank you so much, brother. Weekly analysis not going to be a very big video. I mean, sorry, big stream. I guess within half an hour I'll be able to close my stream today because it's just going to be the analysis. At the beginning of this stream, I would love to say that weekly analysis is something where you don't need to be right or perfect. If you have an idea about the weekly analysis and then around the week, if you see it's going toward your analysis, that's the best area to feel more confident about any kind of setup or entry. If you are wrong, there is nothing wrong. You can be wrong, but even if you are wrong, you will be able to trade because you are not going to use the weekly bias for your 1 minute execution. So it's not that much important, but at the same time it's important to make you more, to feel more confident. So this is what the weekly analysis or the top down analysis actually around the weekend when the market is closed. Okay, if the market is open, you can't go for the weekly analysis. You have to start, do, or you have to finish your weekly analysis around the weekend. That means either after the closing of Friday or Saturday or Sunday. Any of these days you have to finish your weekly analysis. So make sure that you're not doing your weekly analysis when the market is open, because that is not going to give you a perfect analysis if the market is open. That will change your thinking about the market. You have to predict the whole week what is going to happen over there. Beginning, you will start with your calendar. It can be any kind of calendar. I prefer that Forex Factory, but if you have any other calendar which you actually like, please use them. I am going to use the Forex Factory, so you can see forexfactory.com/calendar. This is the calendar. This is the week where we have the non-farm payroll. Okay, so Friday 8:30 a.m. we have the non-farm payroll. In non-farm payroll, week is always messy price action. Either way, we are going to see the worst price action ever this month. The reason is 5th of November we have the election in USA. So that's why I'm believing that this month, not only this week but also this month, week action, price action is gonna be weird. I can be wrong, but that is my expectation actually. But we have also the non-farm payroll this week, so this week is gonna be untradeable. You can't trade in this week. Even if you are overzealous, that means you have to take an entry. In that type of situation, you are good to go for the trade until Wednesday morning. So from the Wednesday PM session to until Friday 8:30, whatever session will come, Asian session, London session, New York AM session, New York PM session, no session should be traded. You can trade, but you have to go to your paper account, then you can trade. If you don't listen to me over here, you are violating some rules that will help you to get a short-term winner, a long-term loser. So please write it down. In the non-farm payroll week, no trade should be placed from the PM session in Wednesday until 11:30 Wednesday, 11:30 a.m. New York local time. Everything is cool from Monday to Wednesday. Everything is cool. But from the PM session, that means after 11:30 a.m. Wednesday to until 8:30 a.m. in Friday, no trade should be done. Now, how to trade the non-farm payroll, that is a different thing. We will talk about this if I'll be here. I don't think so I'll be here in Friday, so I won't be in Thursday and Friday in live. So make sure that you are not in rush and you are not actually blowing your account. Go with the limited trade. Okay, so make sure that you are not blowing your account. That's all. Either way, this whole month will be little difficult. In Monday, we have Fed Chair Powell speak around 1:55 p.m. I actually fear of this guy, Fed Chair Powell. I fear of this guy because most of the time he gives me the choppiness or unpredicted price action. This can be a highly volatile accumulation of seek and destroy mode. It can be simply the choppiness without any volatility. So I'm really afraid of this guy. So make sure that you are not rush in Monday as well. As we have the non-farm payroll around the PM session, the morning session is also going to be disaster in my opinion. Also, we have the PMI, which is actually the medium impact news, uh, going to telecast around 9:45 a.m. New York local time. So around the PMI, there can be little volatile, but I have just no idea how to trade this Monday. This Monday is gonna be, I mean, some kind of disaster or like something like that. So I'm just not interested to trade in Monday. In Tuesday, that should be the best day to trade in this week until Friday. Tuesday should be the best day to trade because we have PMI around 10 a.m. New York local time around in Tuesday. So after the PMI, I the whole day it's gonna be little good price action. If you just ignore the election, USA election, then it can be little better price action in Tuesday. Otherwise, Monday should not be traded. Wednesday absolutely you should not trade, as we have a red impact news around 8:15 a.m. and 8:30 a.m. we have crude oil in, I mean, the medium impact news. It's not important to focus on the medium impact news, but the problem is not, I mean, ADP non-farm employment change, which is kind of a small brother or younger brother of non-farm employment change. So almost they're same, but not so difficult to trade. At the same time, should avoid this thing. Okay, should avoid this thing. Either way, I can trade until the morning session. So from the PM session, no trade should be done. So this should be avoided. Thursday, absolutely no trade, just no trade. How beautiful the price action, I don't care. I have already shown you 2 PM, I mean 2 non-farm payroll week, one after another, where the Thursday price action was bullshit, absolutely bullshit, sick and destroy mode. Go back and check last 2 non-farm payroll week over there, just check it. The Thursday was disaster. One Thursday was a holiday, so far I remember it was holiday. Another one was just normal, but the price action was disaster. So make sure that you're not in rush in this week because this is the most difficult week to trade. Only the Tuesday and after Friday 8:30 a.m. if I just overlook the election, it can be little good price action in this today. I can be wrong. The whole week can be a beautiful price action. Absolutely, it can be. But as per our experience or the way we actually watch the market, it should be avoided. That's all. In short, that's all. So when you will have an idea about the news, you will have an idea about the volatility in the market. So when you are going to get the volatility, that will this calendar will help you to understand that. So now we have an idea about the calendar. I'm not interested to keep it. So let's go to the weekly analysis video. I wanted to start from the monthly chart, as the month this is the last day. That means Monday is the last day of this month. But I think we should start the monthly chart from the next week. Okay, so next weekend, that means Saturday or Sunday. Next Saturday or Sunday, we can start from the monthly chart. So let's start from the weekly chart actually. As you can see, this was a low which has been taken over here. This has been taken. That means this liquidity has been taken over here. Now these two lows over there, these two lows didn't trade this parabolic gap. So if you just mark this parabolic gap over there, which is actually the last parabolic gap from your weekly chart, it is my interest to see that can it reach until this one. So if it would love to go for this parabolic gap over here, I'm just not marking it. This is dollar index, okay, and weekly chart. If it would love to go over here, then in the meantime, NASDAQ will take the all-time high. Always keep comparing this dollar index with your NASDAQ chart. Always keep comparing inside or in your mind. Okay, you don't need to always check the dollar index chart, but you have to have an idea in your mind what is happening in dollar index. If it can go for this parabolic gap, NASDAQ will make the all-time high, which I really don't want to see. So instead, I would love to see it has taken this low maximum. If it want to, I mean, go little lower, it can go until this parabolic, but I don't want to see. I would love to see it will go higher. From there, as it has taken this liquidity, it will leave this relatively equal lows, and then it will go for the buy side liquidity. I have a lot of buy side liquidity actually. This relatively equal highs, this clean highs over there, and these two relatively equal highs. So this high and that high, they are relatively equal highs. Why they are relatively equal highs? As they are the sideways candle. This is the weekly chart. So if you go to your daily chart or maybe the hourly chart, you will see there is a very nice relatively equal highs, as we are using a very higher time frame, I mean very high time frame. The sideways candle doesn't matter. So if you ask me, this high and that high, they are relatively equal highs. This is relatively equal highs. This is relatively equal highs, and these two highs and that one, they are also the relatively equal highs. I'm expecting that market will go for this buy side liquidity. It is just doing this all of these things just because of the election, so it can stay around this area, not below this low, not above any of this high. Instead, it will stay around this area, and then by using the election, it will actually make astonished to everyone. That is my expectation to see. But let's see how it is going to work. So far, it is obvious that market is going to take that low, which I really don't want to see. But if it can go for that, yeah, I will look for this parabolic up over here, and I would love to see the reversal from that parabolic. This is all from daily chart. Sorry, weekly chart. Let's come to the daily chart. So here is my daily chart, and as I told, that was that sideways candle highs. Remember from weekly chart, that was just sideways candle. But if you look over here in daily chart, you will see that this is a swing high, that is a swing high. They are the relatively equal highs. So two swing high from daily chart. Here two swing high, and when you will see this high and those highs, they are the relatively equal highs. This high has made this relatively equal highs more stronger, which is our strongest liquidity over here. So far this daily last parabolic up is holding the price. Yeah, I agree with you that it has been violated little bit. Seems like that it is going for this low. I mean, it's not my liquidity, but it's a low that can be taken, though I don't want to see that. Okay, let me clear this part again. I don't want to see that market is going to take that loss. Don't get confused by these two line. They are the monthly parabolic up. So if you go to your monthly chart, you will see there is the monthly last parabolic up. So I really don't want to say it will take this sell side liquidity, but obviously it can take that sell side liquidity, and just below this sell side liquidity I have the what to say, I mean daily favorable cap and also the weekly favorable cap around that area. Just above this monthly favorable cap, there are a good area to give us some kind of reaction. If it has taken this one, this sell side liquidity, eventually it will reach for this monthly bullish favorable cap. But at the meantime, when it will reach to this weekly favorable cap that I didn't mark, when it will reach over there, it will give us some kind of reaction. It can give us some kind of reaction. If you ask me, I would love to see these two relatively equal highs as my buy side liquidity, and I want to see that market will go for that buy side liquidity primarily. Then it will go for to trade this daily parabolic up again, as it has been rejected from the constant crossman. If you don't see this is the constant crossman rejection, either way it has been rejected from the low. So at least it should reach at least until the constant crossman or to the top of this parabolic up. So to make it fully filled, above this one we have this relatively equal highs, and also this relative all of this buy side liquidity. I'm just interested for the buy run for the dollar index. Remember one thing, it can simply fall and take this sell side liquidity. It can go for this parallel cap as well. We will decide that, as we don't have enough time to trade in this week. So this is the best area to observe the price instead of Tuesday and Friday after 8:30. In that time we should go for the trade. Most of the time we should just observe the price, how it is going to react. Let's go to the hourly chart. So from hourly chart, as you can see, all of this area is just, I mean, it has went lower, take the liquidity higher, liquidity went lower higher. It was seek and destroy mode. So far it has taken the sell side liquidity, all the sell side liquidity. See this low and that low. I talked about these two lows, and I told that market is going to take this sell side liquidity. If you remember in my live, it has taken that sell side liquidity. Now it can go for this buy side liquidity. See this relatively equal highs over there, as well as I have very clean highs over here. Then it has, though it has traded this last five lookup, but these relatively equal highs, sorry, here that's so clean. And below this sells, I mean buy side liquidity, I have these relatively equal highs as well. I would love to see it will go for this buy side liquidity, and it will come around this area. Finally it will actually break this last five lookup, and it will go for this buy side liquidity. That is my expectation, though I'm not expecting it is going to happen by this week. But let's see if it can go for that buy side liquidity or not. But if it is overzealous and I'm absolutely wrong, then it can simply keep falling and take this sell side liquidity. Below this sell side liquidity, we have weekly fair value gap, daily fair value gap, all of them we can reach until this area, then it can just give us some reaction, and then finally it will fall for this monthly fair value gap. I'm not interested to go to 15-minute chart because for me, dollar index is better to analyze from weekly, daily, 4 hour, and 1 hour. That is the best area to trade. I mean, to analyze the dollar index chart. I don't really like the 15-minute chart because I don't need to use this dollar index for my direction for NASDAQ. But if it is going higher and Nasdaq is falling, that is going to be the low resistance liquidity run. If this guy is going higher and Nasdaq is falling, then that's also going to be the low resistance liquidity run. But both of them are going to the same direction. That's gonna be the high resistance liquidity run. So I'm just not interested about the high resistance liquidity run. I would love to catch the low resistance liquidity run. That's why I need this dollar index. But if any of you are trading uh, Euro USD, GBP USD, USD JPY, that means any kind of pair where you have the USD, then don't forget to analyze this uh, dollar index chart from the very lower time frame, because whatever is going to be its direction, other market is going opposite of that direction most of the time, not always, 95% of the time. Okay, so make sure that if you are a forex trader or gold trader, you are giving most priority to this dollar index chart. I would love to go to the NASDAQ first. Sorry, not NASDAQ, E-mini S&P first. So this is my E-mini S&P, and as you can see, this is the all-time high which has been taken over here. Now, how did it take that all-time high? Did the body close above that all-time high? So far, I can see that no, body didn't close above the all-time high. So it is sweeping liquidity. That means market has been swept the liquidity. I really would love to see that it will fall now, at least for this fair value gap. Over here, I have very new fair value gap. So just let me mark it actually. Here, I have a weekly fair value gap over there. Why this E-mini S&P is important, I'll talk about this later. When I'll be in NASDAQ, I'll show you this. Look over here. I would love to see it will fall for this fair value gap this week, at least for this fair value gap. I'm just not interested to see that market will keep going higher. At the same time, ICT told when we are at the all-time high, we should just keep looking for buy, okay, because it is at the all-time high. We should target the moon, the star. I really don't know why, but my whole things are telling me that no, I'm not going higher actually. Instead, I'm going to fall at least for this parallel gap, and then maybe little it will actually violate this parallel gap, then it will go little lower. It's my interest to see if it is going to happen. I'll be very happy to see that. But if it keep going higher, that means if it keep going higher above that line, I have to, I mean, this market will force me just to look for the buy. I can't look for the sell. The reason is it is at the all-time high. So until it doesn't prove you wrong, you have to look for buy only. Just buy, just buy, just buy every day, just every day. Now, it is really so difficult to trade at the all-time high as we don't have any kind of previous price action around that area. So we should just keep looking for buy, which is really absurd for me. Okay, I really don't want to see that. But here, as the market didn't close above this liquidity, you can see it went. I mean, it just closed maybe one or two. I mean, little above of this line, but still, I'm seeing this has closed around the liquidity, which is actually the sweeping liquidity. So over here, it has swept the liquidity, came here, make this parallel gap, went higher again, come back again, closed around this line. I'm just not going to expect the precision from this E-mini S&P market, because I need the precision in NASDAQ market when market is going higher. I need the precision in NASDAQ market, not in E-mini S&P. When market will start to fall, I will need the precision from E-mini S&P market, not from the NASDAQ market, from a longer term, okay, not from a short term. I mean, from the daily chart or hourly chart. I'm talking about from monthly chart and weekly chart. So from monthly and weekly chart, you can see it is actually bullish, extremely bullish. When it is extremely bullish, I need tick by tick precision from NASDAQ chart, not from E-mini S&P chart. So I need just an overall idea how it is going to trade. So as you can see, it has closed around that high and it is sweeping liquidity. I'm expecting this week candle will be a black candle, which candle is going to trade this parallel gap. So until this parallel gap, I'll be bearish. At the same time, if you remember the dollar index, I told that it can go for that sell side liquidity. Just don't forget about the dollar index. It can simply keep falling for that sell side liquidity. In that moment it can keep going higher. In that type of situation, it's gonna be a low probability for me, because I'm not expecting this guy will keep going higher, and I'm also not expecting dollar index will keep falling. It can absolutely fall, I mean keep falling. The dollar index, it can keep falling. I don't want to see that. If it is going to happen, that's gonna be my low probability trading area. What I actually do in that type of situation, when my precision or my expectation is not going to match, either I will do some real scalp, that is gonna be 10 to 15 handle scalp. Otherwise I'm not interested to touch that market. Okay, so make sure that you understand that part. Everything can be changed after the Sunday open. That means Sunday 6 p.m. when market will open, there can be a big, a huge, I mean new week opening gap. This new week opening gap can simply change everything. Whatever I'm doing the analysis over here, that can be changed. Simply that can be changed by that new week opening gap if it is a huge new week opening gap. But if it is a very small new week opening gap like 5 to 10 handle or 20 to 30 handle, I mean so not 20, 15 to 20 handle, it's okay. But if it is a huge like 40 to 50 handle gap, that's really difficult to trade in that area. So this is all from weekly chart. Let's go to the daily chart. I will tell you why I'm just doing this, how to say, I mean this even S&P when I'll be in NASDAQ chart. That was the last fair value gap from the mini S&P. As you can see, market has traded this last fair value gap here. Lot of time it has traded, then it went lower, came until some random level, another last fair value gap, very specific last fair value gap, went higher. This time market went through this last fair value gap, take the all-time high, and then it closed around this area. Okay, so it came back again into the range. This was the range, all-time high range was there, so it came back again inside the range. I really would love to see it will fall, not only for this parallel gap but also for any of this parallel gap over there, or maybe until the order block. So here we have the order block. It will keep falling for this order block at least. So I really would love to see that. If I'm absolutely wrong, then it can simply go higher, keep going higher without giving us any kind of lower run. It can simply do that. I don't want to see that, but if it is going over there, as I told, I will go to 15-minute chart and maybe I will try to do some scalp. Otherwise, I'll just skip this market to trade. Let's go to the hourly chart, and from hourly chart, as you can see, market has taken all-time high over there. The all-time high has been taken, then it was little consolidating, then it left lot of liquidity there. We have lot of sell side liquidity around that area. You can say, brother, where is your sell side liquidity? Why you are saying that? See this low, that low, that low. How beautiful these lows are. What a nice support zone. If you just mark from there to there as a zone, this is just a zone. Okay, don't just bother with anything else. If you just mark this as a zone, so that area, that is zone. Look over here, what happened? This is the first time. Come back again, tap, boom, tap, boom, tap, boom. What a beautiful support zone. All the people who actually took the buy over there, this below this low or maybe below these lows, they have just moved their stop loss. And when market is actually reversing, they will trail it below that low. So this low or maybe this relatively equal lows, if you look this low and that low, they are relatively equal lows as well. Until these lows, it has a lot of volatility, I mean sorry, uh, liquidity over there. That means a lot of people actually put their stop loss over here. I really would love to see it will come back again and take those relatively equal lows or the liquidity or their stop loss. They will take that on. Then if it can overzealous, it can come back again and take this support zone. It can be happen as well. I want to see that, but as I told, if it keep going higher, I don't have any kind of price action over there, and I won't be able to catch that buy down. I know guys, I'm talking too much, and I told that I'm going to close my session within half an hour, but I really don't know if it can take a little longer. I'm sorry for that. Okay, so let's go to the 15-minute chart. This is the 15-minute chart. Again, I'm not expecting some kind of precision over here in mini S&P, because this is not the area where I'm interested to trade right now, as market is bullish. Remember, from the very high time frame, monthly, weekly chart, it is bullish. In a short term, it can be bearish, it can be bullish, that doesn't matter, but in a longer term, it's bullish. Now, as you can see, all of this buy side liquidity has been taken over there. Market trade until this fair value gap over here, which is also a random fair value gap. And if I just mark that random fair value gap, it's gonna be the last fair value gap for me, as you can see. Just let me mark it as a last fair value gap. This random fair value gap, I called it as a last fair value gap over here, and as you can see, it has actually made this high and that high. See this high and that high. They are relatively equal highs over here from 15-minute chart. Let me actually mark it as well. Just here, a very clean buy side liquidity. Now, as I'm expecting that market will fall and it will take a lot of liquidity over here, it can simply prove me wrong and it can reverse from there. Though I don't want to see that. I would love to see it will leave this buy side liquidity at least for now. Maybe later it will come back again and take this buy side liquidity after a long time. Not right now, after a long time, long period of time, it will take that buy side liquidity. At the same time, non-farm payroll has an idea to trade, and that is actually non-farm payroll will leave both buy side liquidity and sell side liquidity for himself. That means before 8:30 a.m. New York local time in Friday, if there is a non-farm payroll news, then what market will do actually, it will make liquidity in Wednesday and Thursday by using an Wednesday and Thursday. It doesn't mean that it is going to use that Wednesday and Thursday only to make the liquidity. It can simply leave this liquidity for non-farm payroll, then it can make some kind of sell side liquidity over there, and then both of this liquidity will be the triggered around the non-farm payroll. So I'm just not saying that it is going to leave this liquidity for longer term. It can simply take this liquidity before actually keep falling. We'll talk about this later, but right now, as I told you, if and only if dollar index is not going to take that sell side liquidity, it will keep falling at least until this area. So let me remove this buy side liquidity. I don't know why I actually marked it as a buy side liquidity, and it will actually come here. This is that fair value gap. We have some relative equal lows here, some relative, see this low and that low. I'm just not going to mark it. This low and that low, relatively equal lows. If you come over here, lot of relatively equal lows around that area, it can simply come for them. I am interested only to look for sell, not interested to look for buy. I will explain it now when I'll be in, now. Okay, so let me actually come to this NASDAQ chart. So this is the NASDAQ chart, and let me keep the E-mini S&P chart below here. So below here, this is the E-mini S&P. Above here, this is the NASDAQ. Actually, let me change the chart. I need a clean chart so that I'll be able to explain what I'm trying to say. So let me make it bigger. Weekly chart, and I don't need this one. Why the E-mini S&P is not there? Just a second. I don't know why it's not there. Just let me. I'm sorry, guys. I didn't notice that it's not over there. Okay. So here, as you can see, this is the NASDAQ chart. This is the E-mini S&P chart. Below here, E-mini S&P. Above here, this is the NASDAQ chart. If you look over there around this area, this is the last parallel gap for NASDAQ. So I'm going to mark that last parallel gap. Long time ago, even before E-mini S&P has taken that all-time high, long time ago in my life, I told that I would love to see that E-mini S&P will take that all-time high. This guy will trade this last parallel gap. Then I will get the SMT over here. Okay, so this high has been taken over here, and for E-mini S&P NASDAQ, it failed to take that high, which is my SMT. I love to see this SMT, and then it will keep falling. Both of them will fall for this sell side liquidity around this area. When market will fall for this sell side liquidity, the NASDAQ market will fall for this sell side liquidity. This guy doesn't need to take that low. See this low? It doesn't need to take that low. Instead, it will trade either the 50% of that week, the 50% of that week, or it will reach until this, around this parallel gap, or maybe below this relatively equal lows. It will fall until this area. It doesn't need to take that low. I want to see this type of price action actually, instead of both of them will go higher and take that buy side liquidity. Now I'm going against most of the people because a lot of people are actually expecting market is going to take that all-time high. I can be absolutely wrong, but I will go for that all-time high if and only if the last parallel gap from daily chart, not from weekly chart. From the daily chart, I'll show you the daily chart actually. When it will close above the daily chart, daily last parallel gap, then I'll go for that all-time high. Until then, I'm just not interested to think that market is going for that all-time high. At the same time, as you can see, I have bullish parabolic up over there. So I would love to see how it is going to react with this parabolic up. That means, is it going to leave this parabolic up open as a breakaway gap? So if it can leave this parabolic, oh man, sorry, I can't make it over there. Just remember, this is the breakaway gap. Let me actually change the color. This is the breakaway gap. If it is the breakaway gap and market can close at least above the constant crossment of this day weekly parabolic gap, I will show you the daily parabolic gap, but from the weekly chart, just remember, at least it can close out that constant crossment from this weekly parabolic gap. Then I will start to think, okay, market is actually going for that all-time high. Until then, I'm just not interested to think that market is going to go for that all-time high. Instead, I would love to see it will keep falling. So the way I explained the mini S&P, it has taken that all-time high. It didn't take that all-time high, which is actually my SMT, and this SMT happened around the last parabolic gap for NASDAQ, where I need the precision around that area. So can it go and fall for this parabolic gap? If it can fall for this parabolic gap, can it violate this parabolic gap and left a bearish parabolic gap over there from weekly chart? If it can do that, yeah, I'm going to think that market is going to go for this sell side liquidity. Everything should be happen from weekly chart. That means it will just simply fall closed below this parabolic gap, use this parabolic gap as an inversion parabolic gap, leave a bearish parabolic gap open over there, and take a swing low that will be made over there. It will be taken by a body close. That swing low should be taken by a body close. Then there can be some kind of bearish parabolic gap as well, and it will fall for the sell side liquidity. Everything is going to happen from the weekly chart. So if this thing happened, then and only then I will start to think for a sell and for this sell side liquidity. Until then, I'm just not interested to think that market is going for this sell side liquidity. I will observe this parabolic gap, how it is going to trade this parabolic gap, or is it going to leave this parabolic gap open or not. If it absolutely leave this parabolic gap open, that means it is not going to touch this one, which in my opinion not going to happen. Maybe it will fall little bit, then it will close around that area just above that constant crossment of that weekly bearish parabolic gap. I'll start to think that no, market is actually going for this buy side liquidity or all-time high instead of this sell side liquidity. Though I don't want to see this thing. Okay, this is just my expectation that market is not going to do that. Instead, it will fall. So this is the area where you have to give the focus. Right now, market is around an area where everything is low probability. The time, first, the time is the factor. What is the time right now? Election time. Second, this is the week of non-farm payroll. Third, market is at the level of the last parallel gap from weekly chart. This is the last parallel gap. Fourth, there we have SMT already. Fifth, we have a very clean sell side liquidity. Sixth, we have only the all-time high and the dollar index also. We are expecting we have a lot of buy side liquidity for the dollar index, but a single low below the market. All of these things, if you put all together, it helps me to think that market is actually going to fall. But that doesn't mean it need to fall for this sell side liquidity, but it can fall little bit at least for this parabolic gap. And then if it close this parabolic gap by body perfectly, I will start to think this is going to be work as a inversion parabolic gap from the next week. For this week, I have already told where you are going to trade. When I'll be in 15-minute chart, it will be much more clear how to plan for this week. Okay, when I'll be in 15-minute chart. So I think that you got this information, so I can move from two chart to one chart. If anyone has any question, I just need to ask this thing, because if it is absolutely clear to all of you, it will be much more easier for me to continue this video. So I need to ask, is it 100% clear or not? Then I will just use this chart instead of using both of these chart. Please just let me know. I'm sorry to ask, guys, but I need to ask it. Hey Joe Andre, how are you, brother? Don't forget to hit the like button. Don't be Don't be gay. Thank you guys for at least giving me 28 likes. It's a huge for me. 42 people are watching and I got 28 likes. That's cool, man. Okay, I just got two confirmation. I just need little more. Little more comment. Just 2 to 3 more people, please. Just write it down. 2 to 3 more people. Then I'll go actually over there. Okay, Rikin, very clear. Joandre, very clear. Thank you. Lazy Pompey, clear. Slate, all good. Anybody? Anybody have any kind of question or any kind of confusion? This is the weekend, so we are not going to lose any kind of entry opportunity. So no need to rush. Oh, okay. Thank you. Okay, so I guess most of the people are shy actually to write something, but it's okay. Let them go. So over here, again, let me make my side clear. I can be absolutely wrong. Market can keep going for this all-time high. It can keep going for this all-time high. I can be absolutely wrong. Wrong. So I'm just telling you the expectation by watching right now the price action. Some of you ask me, brother, how can I go for the weekly bias, or how can I go for the daily bias? Now, weekly bias and daily bias is something which you will not be able to learn by watching some specific video, because every day's price action is different, every week's price action is different. You can't match one week price action to another week. It's nearly impossible. So right now the situation over here, if it is 100% match in future, maybe then this video is going to help you. Otherwise, which is nearly impossible actually, because 100% match doesn't happen over here. Okay, so make sure that uh, you got the point how to do the weekly analysis by using last fair gap, liquidity level, time, and some kind of bullish fair value gap or bearish fair value gap which you will expect as a breakaway gap. So all of these things will help you to understand the weekly chart and the weekly bias. So if you ask me, in short, I'm bearish until this bullish fair value gap. I'm bearish for this week. So after, when market will reach over there, then I will see from a lower time frame how that is going to work with this fair value gap. If it can close below this one from lower time frame, I'll start to think that it is going little much, at least little lower, more lower. But from a lower time frame, if it started to react from kind of constant cosment or from the top of this fair value gap and then started to go higher, I'll start to think, okay, it is actually coming back again, at least until the low of this fair value gap. Until this fair value gap is not traded, so market has closed there. So from, sorry, what happened? Yeah, so maybe from there to until there, 212 handle, I will be bearish for this 212 handle. I will be bearish. Don't worry, when I'll be in little lower time frame, the narrative, everything will be much more clearer to you. Okay? So here, I'm just going to remove this weekly fair value gap, but make sure that this weekly fair value gap is over there in your chart. So don't forget to use that weekly fair value gap. I am interested about this daily last fair value gap. Okay, so this is the last fair value gap from the daily chart. Let me mark it. This is the last parabolic from daily chart. As you can see, market has taken this all-time high. What did I say? Market is going to take that so not all-time high, this relatively equal highs. This is not the liquidity. This high is not the liquidity. Again, it's not the liquidity. The liquidity level is this buy side liquidity. Buy side. Okay, that relatively equal highs. That is your liquidity. When market has taken that food, it has running from there to until there to take this food. It has taken already the food, it has done its lunch. Now it needs a resting place. This is that resting place, very specific fair value gap, last fair value gap. It take its rest, then started to run again. Where any kind of sell side liquidity, it doesn't need to go for this extreme sell side liquidity again to pump more, as it has the extreme food over there. This market knows that this is the extreme food. Okay, so here, this is the most tasty food. Okay, some kind of biryani or pizza, burger, whatever you say, whatever is your favorite food, that is that favorite food over there and here. So this and that, until market is not below that line. See this line? until market is not below that line, this is the most appreciated food over there. That means market love to take that food. I'm just telling this by liquidity as a food. Think that you are a hungry guy and you are running for food. Where is your food? You have here and here. This is the 50%. This information is very precise. If you can use this information, you will be able to be the wizard of your direction. I promise you, brother. Let me mark it little left. Okay, so here, this is the 50% between these two food. Okay, now around this 50%, you always will look for a fair value gap in that specific time frame. As I'm using this daily time frame, I would love to daily fair value gap. If that is the last fair value gap, best case of scenario. That is the best case of scenario. If you have this last fair value gap, if you doesn't have the last fair value gap, instead entry fair value gap, that is also acceptable. But if it is a normal fair value gap, I really don't want to use that normal fair value gap. Okay, I don't actually focus over there. But if this last fair value gap is situated at the middle of the, not exactly at the middle, around the middle of that two food distance. Okay, so this is the distance of this food and that food. Now this last parallel gap, if it is broken, that is 100% sure that market is going to take that, I mean that food. Okay, if this last parallel gap is broken, but this parallel gap has the power to stop the price, send it lower again to take this sell side liquidity. Now, why I'm not focusing any other parallel gap over here? If, for example, we had a last parallel gap there, just for example, I don't have a last parallel gap here, but just think that I have a last parallel gap over here. This is the last parallel gap, like this parallel gap. So this parallel gap and that parallel gap. I have these two parallel gap. When market is going higher, I'm going to give the priority to this parallel gap. But if it can break this parallel gap, which is situated around the 50% of this two distance, I don't give a shit to this last parallel gap. I know that it is going to be broken. 100% it is going to be broken. Why is that? This is the relatively equal loss, which is actually the liquidity. The actual liquidity is this relatively equal loss. Why? Because this is the support zone. Lot of big hedge fund, bank, lot of them who actually trade through this daily chart, not from 15-minute chart, not from 1-minute chart, not from hourly chart, not from any other time frame. They trade through this daily time frame. From daily time frame, all you can see, this is a low, market come back again, tap to this low. Now exactly not that low, but instead of this zone, there is a zone. Okay, so you can mark the zone. I really don't know how to actually mark the zone perfectly, but if you can mark the zone, if you are a retail trader and you know how to mark the supply, the support and resistance zone, then you will be able how to mark this one. But I really don't know how to mark precisely. So this is a zone. They see that market came here, used that zone as a support zone. What does it mean? That means it's nearly impossible to break this zone. If it can come back again here, it will go higher again. It will bounce from there because this is unbreakable. I want to see that market is going to break this zone. Now it's a long-term process. It is not going to happen by this week. So why it is important? Because so that you will have an idea what is going to happen in a longer term. So this information, when you will put this information in your 15-minute chart or 1-minute chart, you will see a new world will open for you if you can use the same information in your lower time frame. As this is the extreme liquidity or the obvious liquidity or the real liquidity, I don't give a shit to this last parallel gap. Even if I know it can give me some kind of reaction, but at the end it is going to be broken and market is going to take this sell side liquidity because market didn't leave any buy side liquidity. If it leave a buy side liquidity around that area, for example, it leave a buy side liquidity, a very clear buy side liquidity from this daily charts, in that type of situation, what I will do, I will remove this buy side liquidity level from there. So let me remove it. Maybe it leave a buy side liquidity here, okay, around that area, and then I will mark the 50% again from that buy side liquidity and that sell side liquidity 50%. If I ever get that this buy side liquidity and maybe there is some kind of buy side liquidity and market has made some kind of buy side liquidity and this is the 50% between these two sell side liquidity, that should be something like this: clean buy side liquidity, clean relatively equal highs over there. In that type of situation, this fair value gap is around the 50%. Yeah, in that type of situation, I will give little priority to this fair value gap, because I know the reaction can send the price again higher to take this buy side liquidity. After taking this buy side liquidity, it will fall again and it will take this sell side liquidity. This is how I get, most of the time I find out the best and the perfect direction when I'm trading. That is why my direction is like that kind of perfect, or I mean 95% of the time. So as you can see, this parabolic gap, which is situated at the middle of this parabolic gap here, I'm expecting that if market can break this parabolic gap, this sell side liquidity is going to be taken, if and only if there is no buy side liquidity market left. Like the way it has taken this buy side liquidity over here, that was the buy side liquidity which has been taken already. The way it has taken, if it can take every kind of buy side liquidity and doesn't leave any buy side liquidity, this is going to be taken. Now, why I'm giving the priority to this parallel gap? Why I wouldn't give the priority here, and why I'm giving this priority and I'm saying that it can hold the price and send the price lower for this sell side liquidity, because I don't have the buy side liquidity. This is the all-time high. Obviously, that is the strongest buy side liquidity, but not the sub resistance zone. It's not the resistance. That means not lot of people took sell from there. Yes, some people actually took the sell. They tried to predict the top, the close of the higher run. Maybe some of them, or lot of them actually took the sell or predict that on. But either way, it's not something like this clean price action. So I really don't want to see this is going to be taken right now. This last parabolic gap has the priority to me. If you remember, let me mark this one, where we had this buy side liquidity. So how did I observe that buy side liquidity? I just put this fib over there. This low, this is relatively equal lows. This was the relatively equal highs. Okay, so just let me remove this one. This is that bullish parabolic from weekly chart. Remember, it can simply keep fall. It can be open. Guys, I'm just explaining everything. If you have any question, you can ask me in the meantime, because I don't want to repeat these things again. And if you don't have any question, then it's cool. I really would love to make it much more clear to you. That's why I'm just wasting little more time around this area, so that you can understand when and how you should give the priority to the fair value gap that can actually hold your price. So that was the buy side liquidity. I put the fib over there and there. Okay, market was going higher around this area. When market was going higher, remember the thing, don't forget the things. Okay, when market was going higher, this was the fair value gap around that area. That was important to me. This fair value gap was important to me. Can it broken? This fair value gap has the power to stop the price, because this is the last fair value gap around the middle point of these two line. See these two line, around these two line, it was the middle point. If it is broken, then this buy side oh sorry, my mistake actually, sorry, my mistake, sorry. It was not the fair value gap, it was not the fair value gap, because this was the high which has made this relatively equal highs. So when market was falling around that area, I was looking for this last bullish fair value gap, not that one. Okay, that bullish fair value gap here. In my opinion, if this fair value gap is broken, this is the sell side liquidity that should be taken. If this fair value gap is broken, why? Because this is the last fair value gap, and this is the 50% of this range and that range. This is the range high, that is buy side liquidity, clean buy side liquidity, clean sell side liquidity, 50%. Market is falling, falling, falling. How far it can fall? Until this constant encroachment, I'm bullish. Still I'm bullish. This fair value gap, or the last fair value gap, has the power to stop the price, send it higher again to clear this relatively equal highs. What happened over there? One candle fall, then market came back again and closed above this fair value gap, which is actually the fake breakout. I don't need the exact or perfect, rejection or something like that. Still this candle, until that candle, I was bearish. So when it has closed below this fair value gap, I was already bearish and I was expecting this low is going to be taken. When this candle closed at the constant encroachment of this fair value gap, I was using this as an inversion fair value gap. It closed around that area. I was extremely bearish. Market is going to take this sell side liquidity. Then what happened? This candle appeared over there, closed above this fair value gap. See this fair value gap? closed above that fair value gap, I'm bullish until this this buy side liquidity. I know nobody is going to stop the price. This fair value gap over there, I never marked this fair value gap. Go back and rewatch over there. I never marked this fair value gap. I never marked this volume balance. I never marked this fair value gap, which also it was not valid actually. It has been closed. I never mark anything. I just keep watching for this buy side liquidity. I was keep saying that market is going to take that buy side liquidity. It can trade this entry fair value gap, or it can be traded this last fair value gap one more time. It can be traded. There is nothing wrong, but it is going to take this buy side liquidity and it is going to stop around this last fair value gap, because it was the fake breakout, which is used as a trough fair value gap as well. That was the trough fair value gap. But if after that candle, which has closed at around the constant encroachment, if there is another candle could close below this fair value gap, just below the constant encroachment of that fair value gap, there was nothing that could stop the price to take this sell side liquidity. It could simply fall and take this sell side liquidity 100%. Now you can say I was wrong in this day, that day, that day. 3 days I was wrong about my direction. Just these 3 days, okay? 1, 2, 3. This day market closed over there. Perfect. I'm bullish. Then every single day I was bullish, and I knew that market is going for that buy side liquidity. I was very specific about that buy side liquidity. There was the buy side liquidity, if you remember, a clean highs over there. I told that after taking this buy side liquidity, that is going to be taken. The way I'm expecting now, market will fall. I will talk about this when I'll be little lower. So is this, do you understand 100% how to use this fee according to your buy side liquidity and sell side liquidity? You got that point? Little quiz play. Okay, bro, can you put this informative videos in a separate playlist? I just put this in the weekly analysis video. I mean, I have to make the video, brother, but to be honest, I'm fed up to make the video. That's why you see that it's been near about two weeks. I'm not making any videos. I'm just, I want to stop doing everything. Instead, just I will keep doing this live streaming maybe some more days. Then uh, I don't know how long I'll keep doing these things. But I'm getting fed up day by day, every day. People are more interested about the mentorship. I just need that answer, brother. Do you understand this, how to use this fib according to your buy side and sell side, and which fair value cap you're going to give the priority? I just need that answer, okay? And at least please, I can see 39 people are watching. Give me at least 10 reply. Don't be shy. Don't be shy. Don't be lazy. Just write it down. Do you understand 100% clearly? What did I mean over there? 1, 2, 3. I got 3%. I need some more comment, please. This small is information is going to make you make you understand the price action better, 1,000 times better. Okay. Okay, Slate. I hope so, brother. But you don't know how to use it. Okay, I'll tell you how to use it. Okay. I come late. Will it be safe? Yes, brother. It will be inside the weekly analysis folder, so you'll get it. Okay, Buro, let me explain that one more time how to use this information. Just let me use this one. See this relatively equal highs, which is very clean relatively equal highs. Okay, so around there, that is your relatively equal highs. Here you have relatively equal lows. This is your buy side liquidity, this is your sell side liquidity. Both of them are very clean. 90% of the time you will see this type of buy side liquidity and sell side liquidity. For example, this is 15-minute chart. Just for example, this is 15-minute chart. Now price is around that area. Okay, I have a fair value cap over here, last fair value cap, which is a bullish fair value cap. When market is falling, I have a last fair value cap here as well. This is a bearish fair value gap. I'll change the color to red if it is a bearish fair value gap. And as it is a bullish fair value gap, I will make it green. Okay. You will use this fib from from that sell side to buy side liquidity. Let me put it over there. This is the buy side liquidity. This is the sell side liquidity. This is the 50%. Around this 50%, maybe there is another last fair value gap. I'm sorry to mark it. I'm not a good artist actually. Around the 50%, there is another last fair value gap from that specific time frame. It can be last fair value gap. It can be entry fair value gap. If it is last or entry fair value gap, that is the best case of scenario. Okay. Now you are seeing that market is falling. So what should you think? You should think that this entry or last fair value gap that can be around. That means little below that 50%, little above that 50%, or around the 50% in this range. Buy side liquidity, sell side liquidity range. It is falling. Okay, it is falling, and it came until this area. What should you think? Market is going to take that buy side liquidity. You are not thinking that market is going to fall for this sell side liquidity. Why? Because this fair value gap is at the level of the 50% of that range. Whatever time frame you are using, that should be in that specific time frame. I'm just telling you, in that specific time frame, whatever your liquidity is, where it will go over there. I mean, if you are using 1 minute chart, use this concept. I mean, this concept in 1 minute chart. If it is 15-minute chart, use this concept in 15-minute chart. Whatever time frame it is going to be, use this information in that specific time frame. When there is a fair value gap which is around the 50% of this area. Now, what is this premium? What is this discount? As per ICT, you should look for buy when it is discount, where you should look for sell when it is premium. I know it is going to violate that thing, but as I told you, including me, most of the people doesn't know how to use the premium anti-discount PD array, premium anti-discount array. So what I have seen that if market can close, I mean, if it can break any kind of PD array, that means any kind of fair value gap, which is situated around the 50% or the equilibrium, if it can break that on, then this sell side liquidity is going to be taken. This fair value gap I'm not going to mark. So this fair value gap I'm not going to mark, and I'm not going to believe that this fair value gap is going to hold the price and sending it higher again to take this buy side liquidity. Instead, it will break this last fair value gap and it will take this sell side liquidity. What else can happen? It can give me a reaction. From there, maybe there is a bearish fair value gap or entry fair value gap, new bearish entry fair value gap, or uh, last fair value gap. It can reach until or the order block or breaker block or mitigation block, propulsion block, whatever it is. It will trade around that area, then it will fall and take this sell side liquidity. Now, if this fair value gap can hold the price, that means it didn't break it. Instead, breaking it, it went little higher, make a bullish fair value gap around that area. What did I say? After a big fall, always look for a bullish fair value gap. There is a bullish fair value gap. Price trade that bullish fair value gap. What should you think? Market is coming back again, take this buy side liquidity. If this fair value gap is above this 50%, there is no other fair value gap except this one, which is actually your entry fair value gap or the last fair value gap. Maybe that is your entry fair value gap and this is your last fair value gap. So let me change the color as a bullish. So this is your entry fair value gap, this is your last fair value gap. This entry fair value gap is around the level of the 50%. You will think that this fair value gap will hold the price and it will go toward that buy side liquidity. It doesn't need to even trade the 50%, the equilibrium or the discount. It doesn't need to do that. Is it clear to understand now? Because I tried my level best. If you don't understand yet, then I don't have anything to say actually, because I tried my level best. This is the easiest way to explain this thing. Absolutely not always. That means 100% of the time, no. Sometimes this type of fake breakout can happen. But if you understand that logic and if you understand the fake breakout, perfect, man. Just perfect. Because you know that was the fake breakout and market is not going for this sell side liquidity. It is simply going for this liquidity. Okay. I hope that it will. Oh, okay. Thank you. Okay. So where I was, right now this last fair value gap is important to me because this is not relatively equal highs. It is the strongest liquidity, but still this is not the relatively equal highs. So I love to give the priority to this last fair value gap from the daily chart. If it is broken, I will go for that all-time high. I know that nothing is going to stop the price to take that all-time high. Just nothing. What else can happen? This can be the reaction from this last fair value gap. Market is actually willing to go for that buy side liquidity because it has already broken the fair value gap that was around the 50% of these two range, which has been broken over there. So if you think this is the strongest liquidity and market is seeing this as the strongest liquidity, like this liquidity, which I don't see like that way, but it can be. If market see this as a strong liquidity and it is the reaction, then absolutely market will go back again, close above this fair value gap, then and only then I will be bullish for this all-time high, and then until the moon I will keep looking for buy. Right now I'm thinking that market will fall at least for this weekly fair value gap, then much more lower, and this is the fair value gap which is situated in between these two area. This fair value gap, sorry, this sell side liquidity, that buy side liquidity. In between, this is the 50% where is I have this bullish fair value gap. I will keep looking for sell, or I will keep thinking that market will be at least until this fair value gap, the last fair value gap, or the order block over here until this area. Then I will observe this fair value gap. Can it break this fair value gap? If it can break this fair value gap, this sell side liquidity is going to be taken, nothing is going to stop. If it doesn't reach until this area, instead it will make this fair value gap as a breakaway gap, this fair value gap as a breakaway gap. Why this fair value gap? Again, let me show you. 50%, see this fair value gap. If it failed to reach until this fair value gap, as it trade this bullish entry fair value gap and keep going higher, failed to reach until this fair value gap, instead closed above this daily fair value gap, that is much more confident buy, much more confident buy. Okay, so I hope that this part is clear. I am willing to see that market will fall from the daily chart. It can be the reaction from this daily fair value gap until the order block, which is unfinished business, which is absolutely unfinished business. It can come until this area before even go higher or lower. We will see that later. I would love to see the falling for this week. If I'm wrong and market actually go higher, closed above this daily fair value gap from the daily chart, yeah, I'll be bullish, and my range will be from maybe from there to there. This 445 handle will be my bullish move. I don't need that 445 handle, I just need 45 handle. Out of 445 handle, I just need 45 handle. That's enough for me for being profitable. But if it takes long time, like 2 to 3 4 5 days to take that all-time high, I will get every day 45 handle, every day 45 handle until this buy side liquidity, and then I will keep looking for buy. Actually, no stopping for me until it proves me wrong that it doesn't want to go higher anymore. Okay, whatever the order block above the last fair value gap, there is no importance of that order block because above the last fair value gap is the strongest one. So if you look for the order block, it has to have some kind of perfection over there, the price action over there, the narrative over there, then the dollar index support over there. Lot of things you need if you would love to use anything else except the last fair value gap around the area above or below the last fair value gap. So you need a lot of things over there. Or if everything is going to tell you that this order block is important, then and only then you can think that, oh, okay, maybe this order block is going to stop the price again. As you can see, this order block has been traded already over there, so this area has been traded already, so I don't need to think about this order block anymore. This order block has already done its job, send the price, take that low. So this fall, it has already done its job. When a PDRA has done its job, I don't give the priority to that specific PDRA anymore. It can be reclaimed, but I don't see like that way. I love to be wrong over there if it is the reclaimed order block or reclaimed fair value gap. So from the daily chart, as I told, even if it is the reaction, it can be the reaction. I would love to see it will keep falling. So how far it will fall? For this fair value gap. So if you just mark this fair value gap and keep that in your mind, it will be easier for you to remember that this fair value gap is my target. Now you can say, brother, you told market never go for the, I mean, go for the fair value gap, it always go for the liquidity. Why it will fall for this fair value gap? Now it is not falling for this fair value gap. This is the reaction from this fair value gap. So I'm seeing this is the reaction until it's not broken. If it is broken, then obviously it will go for this sell side liquidity. At the same time, you will see that there is a lot of liquidity from lower time frame. So let me go to the hourly chart now. Now this is the hourly chart where I really don't focus on hourly chart. The reason is hourly chart I love to use for just the liquidity, but to be honest, I'm not interested to use the hourly chart. And to be honest, I have nothing over here except this liquidity. See this low, these three lows, they are relatively equal lows over there. This is relatively equal lows, which is also the obvious liquidity around that area. Some kind of liquidity there and there. Okay, so I just see this thing in hourly chart, and this is that daily bullish fair value gap. I would love to see it will go for this liquidity, and when it will take this food, it needs a resting place, that is that bullish fair value gap. At the same time, here hourly entry fair value gap, last fair value gap, any of this can be traded, and then market can go higher again. I am not interested to spend little more time in hourly chart. Instead, I would love to go to 15-minute chart. So from 15-minute chart, as you can see, this is the entry fair value gap over here, and this area. This is the entry fair value gap, which has been violated little bit. That means one candle closed above this fair value gap, another candle come back again, closed inside this fair value gap. Now this is 15-minute chart where I need the precision. I don't care about any other time frame, but this 15-minute chart has to be very precise, very precise. That was the sell side liquidity I was looking for. Even market was extremely bullish, I told that it should be taken by yesterday, and that should be taken, and then I had this low which should be corrected. Okay, this low should be corrected. I explained it in Friday's price action. I explained why it should be corrected. So if you watch Friday live streaming the first half an hour, you will understand why this low is important. Below this low we have this relatively equal lows. All of these lows are relatively equal lows, and I have this extreme liquidity here, and this bullish fair value gap, also some messy price action from 15-minute chart. So not interested to mark the fair value gap from 15-minute chart. Instead, I would love to go to hourly chart to look for the entry fair value gap and the last fair value gap, because the price action is messy in 15-minute chart. So all of these things is in my mind to think that market will keep falling, and it will actually take those liquidity. This is that weekly bullish fair value gap. So if I remember, this is a weekly bullish fair value gap. It can obviously take this liquidity, correct the market, then it can go for the all-time high again. I will be bearish at least until this low, which should be corrected, and this relatively equal lows, and this bullish weekly fair value gap. At least until this area, I will be bearish. Now, I would love to talk about the narrative actually. Now, Monday should be the accumulation day, though this week is gonna be difficult. Then Tuesday should be the manipulation. Wednesday, Thursday, Friday. This is the narrative. This week's narrative is gonna be different. Why? Because we have the non-farm payroll in this week, so it doesn't need to follow the narrative this week, but until Tuesday it can follow the narrative. It can follow the narrative until Tuesday, but after Tuesday, Wednesday and Thursday, really I don't want to see it is going to follow the narrative, as it is the at the beginning I told already why it is going to be low probability to trade this whole week, except the Tuesday and after 8:30 of Friday, if you just overlook the election, because election is either way, election is going to make this price action worst this month. But if you overlook the election, then Tuesday is gonna be the best day to trade in this week, and Friday after 8:30 it's gonna be the best time to trade for this specific week. Monday, Wednesday, Thursday should be avoided. No trade should be placed in these 3 days. But it's up to you. Obviously, I can be wrong. There can be a very nice, perfect price action over there, and I really don't want to take the blame from you guys that brother, I missed that trade because you told us not to trade over there. I really don't want to get that blame. If you want, you can trade anywhere you want, but if you ask me, I'm not interested to trade except Tuesday and Friday. So all other days are low probability, and I believe that this week, you will see the worst price action ever you have ever seen in your life. Okay, so I'm actually done with my analysis video. That means the weekly analysis video has done for me. I was trying to close the session within half an hour, but it has taken almost 1 hour and 10 minutes. So I'm sorry for this little extra time. If you have any kind of question, I'll ask. I mean, I'll try to reply that. Otherwise, I'm done actually. Okay. What about the bullish order block below the fake breakout or the fair value gap, brother? I'm not interested about the order block, because marking a order block is has some rules in my opinion. Okay, so I have a video in my YouTube channel how to mark the order block. So it's not something like above the last fair value gap there will be a order block. Every up close body close candle or every down close body close candle is not my order block. That was a order block because, for example, this is a order block because this is at the all time high. Okay, actually not that one. So I guess it was here. Whatever it was that was the all-time high. So as it was all-time high, I can simply force the market to make that as my order block. But if you ask me, for example, if you are telling me that this is a order block, this lowest down close body close candle is the order block below the last fabric or something like that, no, this is not the order block. For being a order block, there should be some rules. Okay, there should be some rules. Okay, so gold view, Kanu, gold, gold. Gold. I'm done with the price action. Okay, so if anyone would love to leave, you can leave, guys. Now I'll just go for the gold, and then maybe I have. That was the last day, if you remember. That was the last day I was talking about the gold over here. Tuesday, 24th September. That was the propulsion block. That was the min threshold. I was in live. Somebody just told me that gold about the gold, and it was like flying. I just all of this thing I marked around the live. Okay, so I was looking for this order block, min threshold, breaker block, boom, keep going higher. So let me clear everything. Man, gold is just going to the moon. You should look for only the, I mean, only you should look for buy, only buy. There is no other thing. You should just look for buy because it is at the all-time high. I don't think so I'll be able to do something over here. Just nothing. It's just going higher to the moon. So to be honest, if when it is at the all-time high, no, there is no analysis. You should keep looking for buy, keep looking for buy until it proves you wrong. You should keep looking for buy. But when it will start to reverse, then you will look for this sell side liquidity. Here, see this liquidity here, lot of liquidity around that area. You will just look for that liquidity, but it has to be reversed from the weekly chart or from the daily chart. At least it should make some kind of bearish fabric gap. So as you can see, it has made a bearish fabric gap. So when it has made this bearish fabric gap, you can look for a sell. Here, see this, then bearish fabric gap, you can look for a sell. You are wrong over there. Bearish fabric gap, trade, you will look for a sell. At least short period of time, you will look for a sell. No bearish fabric gap, no sell, and then market never make the bearish fabric gap. So at least from the weekly chart, you should look for a bearish fabric gap before thinking that market is going to fall again. So if you just start from the weekly chart, as you can see, market never make a bearish fabric gap from weekly chart. Just look from that specific leg, from here, exactly from there, to until there, just no bearish parallel gap. If you look over here around that area, it went higher, make a bearish parallel gap. Maybe you got wrong here one time, just one time you got wrong. Again bearish parallel gap, see the bearish parallel gap over there, trade, boom, market fall. See how beautifully it has fallen. This time you were right. This maybe just one time you got wrong. Even you are not wrong, because when market has made this bearish parallel gap from weekly chart, just you got the bearish parallel gap 1-2 week, you got 2 week run, just 2 week. Maybe then market started to go higher and you just got wrong over there. But this 2 week or 3 week, maybe something like that, you were right. Made this bearish parallel gap 1, 2, 3, 4, 5. 5 week it was bearish. You could go for that. Went little higher, trade that bearish parallel gap, or maybe it has traded that bearish parallel gap, again fall. Retracement, bearish parallel gap, trade bearish parallel gap, fall. It again make the bullish parallel gap as market is bullish. There was the starting. So market was bullish, you will start to look for buy. Was there any bearish parallel gap from weekly chart? Until it doesn't make a bearish parallel gap, you can't look for sell. You should keep looking for buy. So make sure that as it is at the all-time high and it is going higher, you should follow the trend. It is going to the moon, let's fly until the moon. So from daily chart or from maybe hourly chart, after watching this type of something, don't just change your bias. Instead keep thinking about the buy. And if you will ask me, so until this area, this is the entry parallel gap, this is the last parallel gap. Market didn't reach until the last parallel gap. It has traded that entry parallel gap, some specific parallel gap. So here it's traded that parallel gap, it will go higher again. See this buy side liquidity over there, this buy side liquidity, this high and that high, they are related equal highs. It will go for that buy side liquidity and the all-time high again. It's my opinion, I'm just saying that you can't just simply change your bias after watching maybe from 15-minute chart some specific area. How far it has reached? It has taken all this liquidity, all of this liquidity it has taken, trade that area. And let me actually see the precision from there. If I'm not sure, I'm just not sure. Okay, let me mark the last parallel from 15-minute chart. This is the last parallel from 15-minute chart to that specific leg. This specific leg, though it's a very small, but still it has a last parallel gap over here, just very small. I really don't like this type of small parallel gap as my last parallel gap. It should be very clean. Retracement, went higher, another last parallel gap. Retracement, went higher, another last parallel gap. Mark this last parallel gap, extend it, sorry, extend it to your right and until this area, and then here and there. This is the last parallel gap to that specific leg. Every specific leg last parallel gap, and you know that you are looking for buy because it is at the all-time high. So you are actually looking for buy. Parallel gap, parallel gap. Not precise. Okay, in gold you are not going to expect the precision, though you can see it has closed inside the last parallel gap, but still sometimes I really don't expect the precision from any other chart the way I'm expecting the precision in NASDAQ. But still it is working. Okay, so you should keep thinking about the buy only, as you have the buy side liquidity here and that area. I'm not telling this is gonna be your bias, I'm just telling you the fact over here. In my opinion, it should keep going for this buy side liquidity, and yeah, if and only if it can break this parallel gap, this last parallel gap, by using this parallel gap as a inversion parallel gap, though I don't want to see that. But if it can break this inversion parallel gap, then see this last parallel gap here, or maybe until this liquidity here. So I'd love to mark it here. This sell side liquidity can be triggered. Okay, though I don't want to see that, to be honest. It should keep going higher as it is at the all-time high. Okay, that's all. I mean, it is at the all-time high, so I really don't have anything to say when it is at the all-time high. I just nothing to say about that. By the way, this is the obvious liquidity, so just don't think this has taken, this buy side liquidity has taken. It's not taken, it's called the obvious liquidity. And when market has done its lower job and it can went through every kind of PDRA which is important to stop the price. This is going to be taken by anyhow. Nothing is going to stop that market to take this liquidity. Okay, thank you guys. I can see 30 people are watching. I got 50 likes. That is really awesome. Anybody has any more question? Hello all, happy Sunday. Hey Martha Shark. No brother, I'm not going to go to the Bitcoin. I'm extremely sorry, I do not trade Bitcoin, but on weekends when market is closed, I like to paper trade Bitcoin to practice my ICT skills. If ICT works on any instrument, it should work. Absolutely, it will work in Bitcoin as well. I have already got a lot of messages, and they told me that Bitcoin ICT concepts work perfectly. I'm just not interested to trade Bitcoin, but absolutely you can actually observe this one. Okay. So anybody has any more question? Otherwise, just good night. I've already wasted like near about lot of time, lot of your precious time for this sudden thing, sudden stream. I didn't have any actually intention to do the live, but I was thinking, okay, just let's do the weekly analysis because last 2 to 3 weeks I didn't do any weekly analysis as I'm fed up just about this YouTube things or something like that. But yeah, I thought that it will be better for some new people actually who are here for the first time and they don't see to me to do the weekly analysis. My weekly analysis is pretty much uh, I'm not saying, but it's almost very correct most of the time. So I'm really very confident about my weekly analysis, but otherwise it's good. I can be wrong. You're most welcome, Slate. So nobody, why you guys don't write anything? 27 people are watching. Why you guys don't write anything? You don't like to talk to me? This guy is just a guru, YouTube guru, YouTube guru. I'm not any guru. We are all our friend. We are all our brothers. We are just sharing our knowledge to each other. That's all, brother. Just sharing our knowledge. That's all. Okay, guys. Thanks for joining. So until the next video. Cheers.